Okay, so again, my name's Kevin Egan, and my business is Asset Protection Services of Colorado, and we're an insurance and financial services agency. And just a little bit of background about myself and my experience. So I grew up in Wisconsin, went to the University of Wisconsin-Madison, studied pre-law. I moved to Colorado in '94, really for the love of skiing and the outdoors. I've been in tech sales most of my career. I've worked for large companies, I've worked for startups, I've worked as a sales rep, sales manager, sales director, so many different hats. And then it was during the dot-com bust. I was unemployed, and so I went back to school and got my MBA at the University of Colorado, Denver, and focused on entrepreneurship. This was a bit of a stretch for me because I am not a quantitative person. And so some of the subjects, like accounting and finance, were a bit of a struggle, but, persevered, got through it. And then, I just knew that at some point I would either start a business, or purchase a business, which I ultimately did. And so it was around 2016 when I've heard some other people say just some of the challenges and the struggles in the corporate world, and being part of rifts and layoffs and all mergers, acquisitions, and so I wanted some independence, I wanted some freedom. So in 2016, just frustrated with that, I started looking around, and I came across the Allstate franchise. You were talking about looking at some franchise, Jimmy, right? And so the thing that I liked about it is that it was stable, it was secure, there's recurring, commissions, recurring revenue from the business on the residuals. And it really was just a matter of imparting, my sales and marketing experience, which I had a lot of, into the business. And so, but easier said than done. I started the business in November of 2019, and, right before COVID. And of course, also Allstate decided to go through their transformational change, one of these corporate euphemisms, which is really just cost-cutting measures. And so, which was good because they were able to, help get the premiums lower and make us a little bit more competitive. But, at the same time, they cut our commissions, and so we had to write more business to make up for that. And that was a struggle because premiums were still very high. And so it was just, the first 3 years were rough, were very, very rough. It was very inconsistent in terms of, some months we would hit it, some months we would miss. And so, and there was a lot on the line. I mean, I took a lot of money out. I rolled my IRA into the startup of the business. And so I'll explain kind of the mechanics behind that. But, had this big note. I had a note with the bank, with Allstate Finance, and then also a seller carry note. So the seller financed a portion of it, a smaller portion of it. And so we had to hit these certain objectives, these monthly agency or business objectives. And if we didn't hit them in 7 months out of 12, they would terminate the agreement, and then I would be out a lot of money. And so the stress was very, very high. And so I just got into the trenches, and I started doing a lot of the selling, and just started really working in the business, not on the business, And so, and we started to make some headway, but it wasn't enough. And so, I'd be at my desk, I'd, be praying, I'd be doing the rosary, just looking for some help. And then about 6 months ago, thank the Lord, just out of the blue, a friend calls me. And he's in the insurance business. And he's like, how are things going? And I explained to him my struggles and my challenges. And he said, I've got the people you need to talk to. And so these are outside consultants. And it just so happens that they know the insurance business and Allstate agencies specifically they've worked with. So they helped me implement some new systems, some new processes, and proud to say, we haven't missed our targets in the last 6 months. We had our best month ever in September. So we're trending in the right direction. So, but there was a lot of things that I learned along the way, which I'll share with you, just some of the do's and don'ts that Patrick talked about. And so, But enough about me. Let's shift to what I believe are the essentials for a successful business. So we're going to talk about just because it sounds like there's a lot of people here that are interested in starting a business. So the first step really is to create the business plan, right? And then, you need to figure out your business structure. What does your entity look like? And what are some of the things to consider when determining that entity? And then we heard a lot from people about funding sources. So I'll cover some of the funding sources. And then the 3 Ps, which are people, processes, and profitability. And this is when you become operational, right? This is what you want to focus on. We'll talk a little bit about financials. And then I'll share with you just the coaching, training, and development that I do with my team that was probably lacking, and it's made a big difference. And we're now getting some momentum from that. And then I know Patrick talked a little bit about scaling a business, and people want to know how to grow the business. So we'll talk about the differences there. Really, in my mind, the difference between an entrepreneur and a dreamer is action. Entrepreneurs do, and dreamers just imagine, right? And so, if you're going to start a business, you need to take action every day, all right? And the first thing to do is just get a pen to paper, get a business plan, just start jotting down your ideas and your thoughts. I used Business Plan Pro several times in the past, and it's a great program, so I recommend that. So in terms of a business plan, to me, those are the key components for a small business: sales, marketing, operations, and financials. There's things like an executive summary, there's market analysis, the management and organization, the competitive analysis, the products and services, operations, and financials, but those are the key. And so, lumping sales and marketing together, you've got your conventional methods of marketing, like cold calling, networking, which we're all doing here, referral partnerships, which are great. Word-of-mouth customer referrals are they have a very high close rate, and they're very inexpensive. Are you going to do some digital advertising? So, you've got, these big woke companies, which I really don't want to give my money to, but sometimes you're just forced to. But you've got Google and Facebook, right? But thankfully, there's other platforms coming online that support Christian conservative companies. Public Square is the name of the company, and I think it was Charlie Kirk that was one of the founders, But anyway, I've done some advertising with them, and I'm hoping that they get some traction because I'd like to give them more of my money. And so, with respect to the sales team, you want to start lean and mean. And as I said, get in the trenches and do some of that heavy lifting yourself. And, I know not everyone is a natural born salesperson, but everyone has innate sales abilities. So people don't just buy products. They buy from people that they trust and that they respect. So be honest, be genuine, be an educator, and you're going to close business. So if you want some help in terms of how to improve your sales skills, there's a great book. It's called The Challenger Sale, and there's 4 key principles to it, and that is, you want to be a teacher. So I talked a little bit about education. You want to tailor your solutions to their specific needs, and that you get that by probing and asking a lot of questions. And then taking control of the conversation. You're the expert, and be confident, be assertive. So that's what a challenger is, and those are the most effective salespeople. And then as far as staffing, are you going to hire employees or are you going to use contractors? Contractors are great because you don't have to pay payroll tax, you don't have to offer benefits, but you can't manage them like you manage an employee, because if you do, you blur the line and you could get yourself into trouble. So you got to be careful with that. They have a little longer of a leash, and it's more of a laissez-faire kind of attitude with those people. So I've used contractors, and I have one, and he's fantastic, and he's just completely... I rarely talk to him, and he just does his job. His customers love him. He writes business. It's great. It's a perfect arrangement. And then, as far as some of your systems, like your payroll and HR management, you can look to outsource that. You can do it yourself. I encourage you to do your books yourself, because that way you have, you're tracking every dime that goes out of your account, and it gives you that laser focus on your cash flow, which we'll get into a little bit. And then lastly, you want a good CRM, which is a customer relationship management software program. The number one program is Salesforce. You may have heard of Salesforce, but there's Oracle, there's Sugar, there's HubSpot, and some are good at sales, some are good at customer management, and some are good at marketing. But get a good CRM. So moving on then to the business structure. Okay, so when determining your structure, you need to consider a couple things, right? So it's the tax implications and it's the liabilities. Liabilities meaning debt and potential lawsuits. The most common, as we know, are sole proprietor. You got a partnership, LLC, S Corp, or C Corp. And so sole proprietor is the easiest to set up. There's no ongoing state and federal registration requirements. The negative is that there's no distinction between you and the business. It's one entity. So you benefit from the profits, but you suffer from the losses and the debts as well. So your assets are not shielded in the event of a debt default or a lawsuit. And with respect to taxes, taxes are a pass-through, a sole proprietor is a pass-through entity. So the taxes flow to your ordinary income. So, which can be a negative because business tax rates, thanks to Trump, what he did in lowering the business tax rate to 21% or whatever it is. That's a lot better than most people's ordinary income tax rate. So it depends on your marginal tax rate. It can be, in most cases, it's a negative. And then with partnership, that's just if you're going to have, additional people involved in the business. There's, you've got your general partnership, you've got your limited partnership, you've got your limited liability partnership. So in a general partnership, all owners participate in the operations. In a limited partnership, you have a general partner who is the operator of the business, and then you have a silent partner. The operator of the business has unlimited personal liability. They're exposed because they're running the business, whereas the silent partner, there's not as much exposure because they're not doing the day-to-day. And then in an LLP, all partners have limited personal liability. Okay, so that maybe is a little bit less common for many startups and smaller businesses. But in terms of taxes, it is a pass-through entity, much like a sole proprietor. Okay, they're easy to create, and they do offer that limited liability that we talked about and that legal protection. So the next big one, this is obviously a very common business. I think, Alex, you have LLC. It's a hybrid legal entity. So the owner's investments and the private assets are not at risk if the company fails. But the corporate veil can be pierced through misconduct. So if there's misconduct, you're still exposed. So just keep that in mind. It can be taxed either as a sole proprietor, or if there's only one owner, then it's taxed as an S corp. So you do have that flexibility with an LLC, which is great. You've got the liability protection for one or more of the owners. Again, you can choose between the taxation method. There's a potential for major tax savings with the LLC because the owners who work in the business full time, they can save on the self-employment taxes if you're set up as an S corp with the LLC. They do require fees and forms to establish and maintain. Tax preparation's a lot more, complicated or complex. You probably need to get, with an accountant or a CPA. And then there's the C corp. And so I structured my business as a C corp, and I did it because I took my IRA and rolled that into the startup of the business without having to pay taxes on it. Okay. And so because of that, I had to set up a 401k, and then there's the whole safe harbor, which is the company matching, and this paperwork that I have to do. It's just infuriating because there's really only two. I'm an employee of the business, and then I have one other person who's an employee of the business. So I have to do this ridiculous paperwork. It's worse than doing taxes, and it's infuriating. But there was a big benefit there in terms of the tax savings to roll that IRA into the startup. So it's a great option. The company that I used is Directed Equity. There might be others out there, but that's who I use. So if you need any info on that, just let me know. And then the other issue with the C Corp, though, is the double taxation effect, right? So you pay business taxes, but then you also will pay personal taxes if and when the company issues a dividend or a distribution. Now, there's ways around that. You can take, if you have, a surplus at the end of the year in profits, you can move that into a retirement account so that you're not taxed on it. So and then with C Corps also, there's like fringe benefits, right? So I tend to expense a lot of those fringe benefits through my business, which is great. And then we talked about the S Corp as a pass-through entity, avoids the double taxation. The only thing with S Corps, which is probably not going to affect any of us, is that you're limited to 100 owners. So it'd be nice to have that have that worry or that concern. But so you get extensive liability protections as well. They are costly to establish and maintain, through the registrations and the fees. But there's a lot of advantage, especially on the C Corp, if you do it in such a way that you avoid that double taxation. So let's move on to funding. So obviously, I'm sure many of you are aware of this. You've got your friends and family, which, that is fraught with all kinds of challenges. If things go south, that could be a very bad situation. But I'm sure we all have friends that, have a lot of disposable income that might be willing to, give you that boost. And, there's angel investors. I think of friends and family almost as angel investors, where they don't really require too much maybe a 2x return or a 3x return on their money or whatever it is, So there are plenty of angel investors out there to consider. And then you've got your credit card funding, which is, it's quick access to capital, but, the rates are high. And so that's not preferable. You have banks. That's a very slow process, and their lending requirements are rigid, and it's a very slow process. You've got the SBA. That's even slower because we're dealing with the federal government. Anything the federal government touched, they seem to really find ways to mess it up. So, but the rates are reasonable, somewhere 7-10%, which is, it might even be higher now. But with that, there may be a down payment or collateral required through an SBA loan. And then I talked about the IRA option. You've got private lenders. You've got the HELOCs, right? You can take a home equity line of credit and use that to fund the business. And then there's the seller carry portion, which I talked about. When I structured the purchase of the agency that I bought, it was the bulk of it was through Allstate financing, and then the other portion was through the seller carry, and it's a very reasonable rate. It's like 4.5% is what she's charging me on the money. So that's something to look at if you're going to be purchasing an existing business. So once you become operational, then you need to focus on the 3 Ps: people, processes, and profitability. Okay, so don't do what I did and hire the wrong people. You have to rigorously vet these people. So working with the consultants, we use a platform called Ideal Traits, and it's an assessment. They have to pass the personality assessment. They have to pass the problem-solving assessment. So there's 3 personality profiles out of 10 that we're looking for. And if they have one of those and they do reasonably well on the problem-solving, then we're going to hire them. And that's what I did. And her personality trait was persistent, and she's fantastic. And so, so I encourage you to really look at something like that when going through the hiring process, because if you hire the wrong people, they are going to be a headache. I almost had a lawsuit issue with somebody I hired. She was an absolute disaster, stole my equipment. I mean, it was just be really, really wary. The other thing is don't make the mistake of keeping underperforming employees. okay? I know that, we're Catholics, we're faithful people, and we get attached. I got attached to my people, and, they're great, they're wonderful, but I just kept them way too long, and they were hurting my business. You have to get rid of that person that is not performing up to your expectations and your potential as quickly as possible. What's that?
Hire slow, fire fast.
Yeah, hire slow, fire fast. There you go. Exactly. And so, and keep the high performers, and you can keep the high performers by giving them great incentives. There's obviously PTO, there's healthcare reimbursement. There's now like an ICRA, there's QSERA, there's ICRA, which allows you to offer healthcare reimbursement for, whether it's healthcare premiums, whether it's medical expenses, and you can do that by employee class with an ICRA. So it's something that's relatively new. I think that also came from the Trump administration, but that way, if you've got part-time employees, they might only get X amount in reimbursement, whereas if you have full-time employees.
Sorry, what was that acronym?
ICRA.
ICRA?
ICHRA. Yeah. ICHRA. Individual Coverage Health Reimbursement Arrangement. It's under the HRA umbrella, which is Health Reimbursement Arrangement. Yep. And then there's 401k, right? I encourage you to set up a 401k if you've got great employees that you want to retain them. Those are some of the suggestions in terms of employee retention, right? And then you need to implement repeatable processes, right? That's what these consultants taught me. So we brought in a great CRM system. It's a dialing platform that we use because most of our business right now is coming from just outbound calling, okay? And so we're buying internet leads and we're feeding the leads into this platform, and it's very, very efficient, right? We're reaching a lot of people on a daily basis. So, and then within that system, there's great reporting available, there's metrics, right? And so review these metrics we review them on a daily basis. So this is kind of sales focused, but because that's primarily what we are. My business is a sales organization. And so we look at how many calls are you making, how many quotes are you doing per day, and we set targets for their sales. They have sales targets that they have to hit, and there's consequences. It's written into the employee handbook that if they don't meet X number of premium per month, then they're subject to termination. Again, I just can't afford to keep those people unless they're paying for their sales and they're accretive to the business. And then just as far as expenses, the profitability aspect, I finally, created some time ago, but I created a very simple pro forma statement, right? Which is your future cash flows. And I've got it mapped out every month, and I'm using sales data from the previous year, and I can toggle the input. So if I want to add another employee, what is that going to do to my cash flow? How many more sales am I going to need, right? And so I'm just looking at that like now weekly, if not daily, and so just be maniacal with your cash flows, and that will having that picture, that forward-looking picture, will really help you make the right decisions now. And they're very simple to set up. But the other big thing, which I've done in the past in other sales jobs as a sales manager and whatnot, but I probably was never really that good at it because I was too laissez-faire with my employees. It's like, I trust them, like, your charter, what you need to do. I'm not going to be over your shoulder, just go do it. And so, but I forget that there's a lot of people out there that just either aren't doing things, they're not doing things the right way. They have, they've been doing it a long time, and it's just how they do things. And getting those people to change their habits is very difficult. So it's something that we do now daily, where with these consultants, we have a mantra, right? This is an opening positioning statement with the customer. We have our, there's the positioning statement, and there's the mantra, and, it sets up the conversation. And so getting them just to say, like a short couple of paragraphs has been such a challenge. So we meet every day, and I have them repeat it. And you can do things like role playing where, you're the customer, they're the salesperson, vice versa. So I encourage you to do that as well. And then, I can listen into their phone calls and provide feedback. Again, this is very unique to my business. It doesn't apply to all businesses, but I just think that any business owner really needs to take a very hands-on approach when it comes to sales. And so just get good at it. And then we talked about having the sales goals and the targets, and then, review the pipeline. So, they know what they need to hit every month in terms of their sales targets. So you need to make sure that they're filling the funnel, and that comes with the activity, right? That comes with the calls and the quotes. But review that. Have them give you a 30, 60, 90-day view of their pipeline, their funnel. And, if they're not filling it, you're going to have a problem, and it's going to come up pretty quick, and you're going to have to make a decision. And so always be kind of in a hiring mode. Always have some people on the bench, if you will, in the event that you need to, unfortunately, let somebody go who's underperforming. So, and then, you reach maturity, and now it's about scaling and growing the business. And scaling is increasing revenue, but keeping costs low, right? So some examples of that. Partner referral programs. So we had a concierge program because we hired a marketing agency, and they put together some good programs for us. And the concierge program was that we had a directory on our website of vendors that were vetted, that were high quality, and people could go to that website and find a roofing company, a contractor, a carpenter, whomever. And so, so the way that works is that we would go out to, let's say, it's a mortgage broker, and we would say, what we're going to do is we're going to feature you on our website. We're going to advertise you, through email to our customers. We're going to do social media. We're going to put you on Facebook, right? And so, and we're going to do that, there's no obligation, but then, obviously the expectation is there's some reciprocity, right? And so that's the partner referral concierge program. We also did a worthy cause marketing, which is, a customer refers a friend, family, coworker, whomever to us. We do a quote. We'll donate $10 to a charity in their name. So, it's $10 it's very inexpensive. So those are some examples of how to scale the business but keep the expenses low. And as I talked about, referrals have the highest close rate, and they don't cost you anything. So and then growth is taking on debt. So you're going out, you're looking for some funding, take on some debt so that you can build out a larger sales team. So that's an example of growth. It does require a little bit of a debt load. So just to summarize, to recap, for you entrepreneurs, just take action every day. Do something. Just start with that business plan. Start jotting down your ideas. Consider some funding sources. Okay, for established businesses, focus on the 3 Ps. Build your sales skills. Make sure you're coaching and training and developing your people on a constant basis. And then just have a maniacal focus on your cash flows and manage it to the T. Because there have been a couple months, several months, where I was like, I don't know if I'm going to be able to pay myself, and so, and what fixes that? Sales. So, again, just get well versed in that area. And then scale and grow. So, with that, I wish you all the best of luck, and God bless. And if there's anything you need from me, you've got Patrick's, I'll be listed somewhere, right? But give me a call, give me an email. Happy to help any way I can. So.